For activity-based costing, there are three methods to measure the cost. The first is plan-wide rate. It is the easiest to apply because all overhead are treated equally by all cost objects. The second, departmental rate, are more refined at least because we were breaking costs down by department and applying overhead based on the actual activity in each department. For activity-based costing, we're breaking down activities within the production process and calculating rate for each activity. So for our company, we are allocating the cost by using activity-based costing because it gives a more accurate cost and it is helpful for decision making.
Next, Chapter 6. Chapter 6 is about process costing. Process costing is used when the mass production of the similar product, where the cost is associated of individual and output cannot be differentiated from each other. Then have the three types of the process costing. The first is weighted average costing. The second is standard costing. The third is first in first out costing method. After that have the 5 steps of the process costing. The first step is preparation of fiscal flow schedule. The second step is preparation equivalent unit schedule. The third step is computation of unit cost. The fourth step is use the unit cost to value goods transferred out and those remaining in the working in process. After that, the final step checks to see if the cost assigned in step 4 equal to the cost to account for.
Hello guys, I'm Fandriana Danat. Today I will tell you about allocating costs of support department in joint products.
Chapter 8 about budgeting for planning and control. Budgeting for planning and control have three types of budget: master budget, operating budget, financial budget. The first budget is the sales budget, which is based on the sales forecast. Sales budget is the projection approved by the budget committee that describes expected sales for each product in unit and dollar. The sales budget is the key to prepare all of the budget. The formula of sales budget is sales equal unit times unit selling price. Second, production budget. The production budget describes how many units must be produced to meet sales need and satisfy ending inventory requirement. The production budget to compute three budgets. The budget is direct material, direct labor, and overhead. Unit to be produced equal ending inventory unit plus unit sales minus beginning inventory unit. Next, direct material purchase budget. Direct material to compute how much direct material we need and for cost of goods sold budget. The formula is purchase equals desired ending inventory of direct material plus expected usage minus beginning inventory of direct material. Next, direct labor budget. The direct labor budget shows the total direct labor hours needed. Next, overhead budget. The overhead budget shows the expected cost of all indirect manufacturing items. The formula is total overhead equal variable overhead rate times activity level production cost driver plus budgeted total fixed overhead. Next, ending finished good inventory budget. The ending finished good inventory budget supplies information needed for the balance sheet and serves as an important input of the preparation of the cost of goods sold budget. Next, cost of goods sold budget. The cost of goods sold budget provides the information needed for the income statement. Next, administrative expense budget. The administrative expense budget consists of estimated expenditure for activity non-production. Next, budgeted income statement. The budgeted income statement is based on all of the component budget. Next, the cash budget. The cash budget compares inflow with outflow. Next, budgeted balance sheet. The preparation of budgeted balance sheet depends on information from the current balance sheet and the information in the order budget in the master budget.
Chapter 9 about standard costing. Standard costing. Quantity standard. Tell the amount of input that should be used per unit of output. Price standard. Tell the amount that should be paid for the quantity of input used. Where do quantity and price standard come from? Quantity standard come from experience, studies, and personnel. Price standard came from operations, purchasing, personnel, and accounting. What is the difference between ideal and attainable standard? Ideal standard only work under perfect conditions. Attainable standard can be achieved under efficient operating conditions. Standard cost system. Why adopt a standard cost system? For planning and control, to improve performance measures, to give manager more information by decomposing total variance into price and usage variance. For product costing, to use unit cost system that is readily available in pricing. This is example about cost assessment. Standard cost per unit is the sum of standard cost for direct material, direct labor, and overhead. This is example about cost sheet for blue Cheetos. Standard cost sheet provides detail for the standard cost measured. Total budget variance is the difference between actual cost and planned cost of productions. Favorable and unfavorable. The difference between actual and planned can be favorable or unfavorable. Does not mean good or bad. What should we do when we find variance? If variance are significant, that is, if they are beyond our control limit, they should be investigated if it is cost beneficial to do so. This is about formula total variance. Total variance, actual price, x actual quantity, minus standard price, x standard quantity. How can we make total variance more useful? Total variance provide more information if they are divided into price variance and efficiency variance. Who is responsible for a material price variance? The purchase again. MPV as performance evaluation. Limitations on using price variance is performance evaluation. Buying lower quality or too much inventory. Result of investigation show shortage of usual grade of corn. Purchasing again has no control over supply. Who is responsible for a material usage variance? This is the production manager. Who is responsible for a labor efficiency variance?
the production and maintenance managers. Variable overhead spending variance. Variable overhead spending variance arise because price change. It includes things such as indirect material, indirect labor, electricity maintenance, each increase or decrease in the item is beyond control of the manager. Fixed overhead spending variance. Fixed overhead spending variance is the difference between actual and budgeted fixed overhead. It includes things such as salaries, depreciations, tax, and insurance. Increase or decrease in the item is beyond control of manager. Journal entries. Blue Crown must write journal entries to enter information for variance into account. Recording variance are closed in cost of goods sold. And thank you.
Baiklah, di sini saya akan menjelaskan sedikit tentang strategi cost management. Baiklah, di sini saya akan menjelaskan sedikit tentang strategi cost management, di mana di sini dituliskan strategi cost management deal with measuring and managing costs and aligning them to the business strategy. Dan saya akan menjelaskan artinya. Manajemen biaya strategi atau strategi cost management adalah penggunaan data atau biaya untuk mengembangkan dan mengidentifikasi strategi yang unggul yang akan menghasilkan keunggulan dalam bersaing. Jadi di sini yang penting adalah keunggulan bersaing atau biasa kita sebut dengan competitive advantage, yaitu menciptakan nilai pelanggan yang lebih baik dengan biaya yang sama, bahkan dengan biaya yang lebih rendah dibanding dengan biaya yang digunakan pesaing. Umumnya terdapat dua macam strategi, di mana yang pertama adalah strategi biaya rendah, yaitu yang tadi dijelaskan, yaitu kita memberikan nilai yang sama dengan pesaing, tetapi kita menggunakan biaya yang jauh lebih rendah dibanding dengan pesaing. Yang kedua adalah strategi diferensiasi atau strategi yang digunakan oleh perusahaan untuk membedakan produk yang dijual dengan pesaing dengan yang kita, agar lebih mudah dikenali oleh customer. Di sini saya akan menjelaskan sedikit tentang definisinya. Kalian juga bisa lihat yang sudah terpampang di slide ini. Yang pertama adalah cost management. Cost management adalah proses of planning, controlling the budget of a project or business. Jadi adalah proses kita merencanakan hingga kita mengontrol budgetnya. Sebenarnya di sini ada beberapa step, tetapi tidak saya pampang di slide. Tapi akan saya sebutkan. Yang pertama adalah resource planning. Yang kedua adalah cost estimating, yaitu kita mengestimasi cost yang telah kita rencanakan, yang telah kita dari resource planning tadi. Yang ketiga adalah cost budgeting. Di sini kita adalah menentukan budget yang akan kita keluarkan atau yang akan kita pegang sehingga kita tidak melebihi biaya atau budget yang kita tentukan. Kita menentukan cost budget ini dari yang cost estimating yang kedua, proses kedua tadi.
Chapter 15. By using lean accounting, the company can eliminate waste and maximize customer value. It is characterized by delivering the right product in right quantity with zero defect at the exact time the customer needs and at the lowest possible cost. The 5th principle is number 1, precisely specify value by each particular product. Number 2, identify the value stream for each. Number 3, make value flow without interruption. Number 4, let the customer pull value from the producer. Number 5, pursue perfection.
Chapter 16. Chapter 16 is about cost volume profit analysis. Cost volume profit analysis is a powerful tool for planning and decision making because cost volume profit analysis emphasizes the interrelationship for cost, quantity sold, and price. It brings all of the financial information of the firm. After that, have the break-even point and target profit in unit and sales revenue. Break-even point is the point of zero profit, and target profit will be achieved only if the sale or number of units sold surpass the break-even point. Break-even point can be calculated by using: the first is contribution margin, the second is sales revenue approach. After that, have the risk and uncertainty. Risk and uncertainty are a part of business decision making and must be considered. The manager deals with risk and uncertainty in a variety of ways. Two concepts useful of the management are margin of safety and the operating leverage. Margin of safety is the unit sold or expected to be sold of the revenue earned or expected to be earned about the break-even volume. Then the operating leverage is when a business expanding successfully, company will think of how to increase their sales and ranking even higher revenue.
Baiklah, di sini saya akan melanjutkan menjelaskan tentang JIT atau Just in Time and EOQ atau Economic Order Quantity. Pertama kita mulai dari JIT dulu. JIT adalah suatu sistem yang digunakan untuk memenuhi kebutuhan pelanggan pada waktu yang sesuai dengan jumlah yang dikehendakinya. Lalu, apa tujuan JIT ini? Tujuannya adalah untuk menghindari terjadinya kelebihan kuantitas dalam produksi atau biasa yang kita sebut dengan overproduction, persediaan yang berlebihan dan juga pemborosan waktu. Dengan adanya JIT, kita dapat mengatasi 3 pemborosan atau waste dari 7 waste. Jadi, di sini mungkin ada yang tidak mengerti apa itu 7 waste atau 7 pemborosan. Kalian dapat melihat slide. Yang pertama yaitu overproduction, yang kedua adalah inventory berlebih, ketiga adalah waiting, keempat adalah motion atau gerakan berlebih, kelima adalah transportation, adalah pemindahan yang tidak perlu, keenam defect, ketujuh overprocessing. Jadi kalau ingin melihat lebih jelas bisa melihat slideshow di atas. Saya sudah meletakkan detail per waste-nya. Oke, baru kita lanjut di sini adalah tentang economic order quantity. Economic order quantity itu apa sih? Banyak yang bertanya mungkin tujuannya apa? Sebenarnya tujuan dari EOQ ini adalah untuk menentukan jumlah pembelian yang paling ekonomis. Di sini EOQ sendiri terdiri dari biaya pemesanan, atau biasa kita kalau misalnya kita menghitung menggunakan rumus namanya ordering cost atau setup cost. Apa ordering cost itu terdiri dari apa? Yaitu semua biaya dari persiapan pemesanan sampai dengan barang yang dipesan itu sampai atau datang. Yang kedua adalah biaya penyimpanan di gudang atau yang biasa kita sebut dengan carrying cost. Ini adalah biaya yang biasa mungkin lebih ke biaya sewa gudang, biaya pemeliharaan, biaya asuransi dan lain-lain. Di sini kalian bisa lihat saya sudah meletakkan rumusnya, yaitu rumus EOQ dan juga detail-detailnya, di mana EOQ adalah